USTEC 100, popularly known as the gold spot. And in fact, we have quite an interesting situation going on here. And like I said during our live session yesterday, this market has been very, very choppy, characterized by a level of uncertainty as market participants are still not sure where price is likely going. And of course, this is not coming to us as a surprise at all. Remember, price action is currently at a phenomenal high, and usually when price action hits a new high like this, there is always this tendency of fear coming into the market, resulting in major key players in the market who had rode the momentum all the way to the upside, wanting to close in some of their positions in the fear that price may crash from that area. So as a result of this, we have seen choppy situations in the market, retracement phases, and as market participants get to acclimatize with this newly reached level at this point. So in the beginning of the week, when we were looking at this market, it was more of a consolidation. Remember, we saw price initially got confined within the 16,850 and the 16,800. This was where the range was before price finally expanded further to capture the 16,870 and our key level at the 16,700, giving us a very wide range of consolidation in this market. So it has been really, we had a loss here, I think, around this area when we bought, and price did not really gain that traction. Now, during our live session yesterday, we did say here that one of the things we noted during our live session was the demand zone around the 16,730 and the 16,670 area, which falls just right around that our key level for this week at the 16,700 area. And one thing we said during our live session yesterday is that we shall look out for buying opportunities only at the breakout of the 16,750. We had the buy position triggered. It went into a loss as price, the traction was not really that strong. And we did say that if price can take out this demand zone, especially the 16,700, we look out for selling opportunities. I do hope you capitalized on this one. We saw price drop to the downside, moved about 140 pips thereabouts, moving significantly well. And if you had moved your stop losses accordingly, you must have been taken out with a reasonable amount of profit on that one. And then well done to you for capitalizing on that move. Then we saw during the early hours of today, following the Asian session, where we saw a little bit of consolidation phase between the 16,750 and the 16,700, leading to another breakout of the 16,750 again, which is in alignment with what our expectations are yesterday, that as long as we are going to be buying here, we would need price to break out of the 16,750, which sits confidently above that demand zone we identified earlier. And if you had capitalized on this one, well done to you, as you will currently be running with about 50 pips approximately at this particular point in time. So well done to you for capitalizing on this one. And as it is right now, and based on the way things are going, I will suggest that you move your stop losses to your entry point right now, so that if price goes against us, we shall be getting out of the trade with a break even on this one. Now, with a well-secured position, and as we look ahead, anticipate the Philadelphia manufacturing survey, and of course the initial jobless claims, and of course the speech from USTEC later today, how do we intend to position ourselves for the next move? Well, at this point, the market's still looking very bullish. Price sitting above that robust demand zone around the 16,730 and the 16,670. However, before we go into the details here, let's run through the higher time frame for the sake of those who are joining us for the first time, and of course, making us to refresh our memories as to what we saw here. Now, during the early days of this week, our center of focus was on the daily time frame, where we took into consideration the nature of price action in the last 4 to 5 months. And what we were able to see here was a bullish momentum, of course. And we have a couple of ascending trend lines in that regard. But this one right here is the one we are using to guide our decisions for this week. Now, in addition to this trend line was a range we identified here. As you will see, after price broke out of the 16,200 to hit that new high had the 17,000 area, we saw price in the last 4 to 5 weeks has been trapped within a range between the $17,000 area and the 16,200 to emphasize the indecision going on in this market. Now, while we are in a range, it is obvious that price still sits above the ascending trend line. And to help us guide our trading decision for the week, we had a key level situated at the 16,700. This level here had played a major role in determining the direction of price action in the last 4 to 5 weeks. And as a result, we said we will use this to guide our trading decisions for the week. And you know how we use our key levels in this community. When price remains above the key level, we want to continue to look out for patterns and structures that supports the idea of buying that asset. Now, last week, Wednesday, we saw how price broke back above the key level, as you will see right here. Let me zoom it in so we can see things clearly. However, as soon as price broke out that structure, we saw how price became trapped within a range just sitting above the key level. But one thing we noted here is that price is yet to break out of the previous high, giving us a lower high here with a tendency that could incite a sell-off only if the ascending trend line is broken to the downside. But since that is yet to be broken to the downside and price remaining above our key level at the 16,700, it makes a lot of sense to continue to look out for buying opportunities. Now, with the information we have gathered here on the daily time frame, price sitting above the key level, let's see what is going on in the market on the 1 hour time frame, and of course let's see how market participant had related to the 16,700 level since the beginning of this week. Now, looking at the structure here, we already talked about the consolidation phase here and the fact that price still sits above the key level at the 16,700, and of course we had a buy position triggered already at the breakout of the 16,750, and I did mention earlier that we move all stop losses, securing the current position while we look out for more opportunities at the breakout of the 16,800, 16,850, and of course the 16,870. So we position ourselves above this level, looking out for more opportunities to maximize the bullish momentum here. And in fact, if price can break out and take out all the sell positions along the 16,870 area, retested, then we will feel more confident to be in a buy position on this asset. So on this one for today, we maintain a bullish bias here and continue to maximize the potential of this bullish move. Now, in as much as we are looking out for buying opportunities, we cannot ignore the potentials that sellers could also come in this market. Now, if you look at the structure since price broke down that 16,700 yesterday, we saw how price came back above the demand zone. So if we are going to consider selling, I think we have a trend line here which we can actually use to guide our trading decisions for today's New York session. So if we connect the pivot lows appropriately and then we bring back our candle chart to do some little adjustment, I think this ascending trend line should be playing a major role in guiding our trading decisions for today. Now, if price continues to maintain above this ascending trend line, we shall feel comfortable in our buy positions, while we will, of course, continue to look out for more opportunities to buy. However, if price breaks down this ascending trend line, we may begin to see some selling opportunities unfold on this chart, but I will advise that we not jump into conclusion yet immediately after price breakdown, as we will need some beautiful confirmations before we jump into a sell position. And why have I said this? Well, the fact that price action still sits above a robust demand zone between the 16,730 and the 16,670 should negate any idea of even considering selling this asset at all. Now, even if price breaks down this ascending trend line, I would like to see something like a strong pattern that says that buyers are losing the steam, maybe like a double top structure, head and shoulder pattern, where the marking of the neckline and the breakdown retest of the neckline will be a good confirmation to join the decline to the downside. And then if price can break down the 16,700, we feel confident selling, and then adding more positions only if price action can take out the 16,575 level. So you do want to be marking that level out on your chart as well, as we look out for more opportunities to sell at the breakdown of the lowest point price action has gotten to for this week. So this is my simple view here. I doubt if a bearish momentum will happen here. That robust demand zone makes a lot of sense for buyers at this point in time. So let's see how the market will play out. I encourage us all to mark out these levels on our chart, as we will be needing it to guide our trading decisions for today.